Today we're discussing why Ethereum is still undervalued. While Bitcoin grabs all the headlines, Ethereum quietly powers the backbone of the decentralized web. From DeFi platforms to NFTs, and now the transition to Ethereum 2.0. The network isn't just surviving, it's evolving. If you're looking for long-term potential and real value, Ethereum deserves a closer look. Today, I'll explain exactly why it may still become the number one currency. It may actually pass Bitcoin in the future. But, it's still too early to tell. Ethereum isn't just a cryptocurrency, it's a platform. It's the foundation for smart contracts, decentralized applications, DApps, NFTs, and decentralized finance, like DeFi. Many investors judge crypto based on price charts alone, but the truth is Ethereum's value isn't just in the short-term price. It's in the adoption and utility of the network itself. Today we're going to discuss why Ethereum may still be undervalued. First, supply mechanics and scarcity. Second, growing adoption in DeFi and NFTs. Third, transition to Ethereum 2.0 and proof of stake. By the end, you'll understand the real story behind Ethereum's price and what metrics to track, and why it can still be a major opportunity for long-term investors. First, let's go over supply mechanics and scarcity. Ethereum supply mechanics have fundamentally changed, and that's the big reason why it could be undervalued. We look at Ethereum's price. It's had a pretty good year this year with Bitcoin as well, both going higher. So if you invested this year, you've done exceptionally well. Also, we take a quick look at Ethereum. Is not just digital currency, it's the platform on which most of the decentralized finance ecosystem runs. Right now, over 100 billion in DeFi assets are built on Ethereum, from lending platforms like take a quick look at there's lending platforms and decentralized exchanges are running on Ethereum. And the reason that matters is because adoption drives real demand for Ethereum. Every transaction on these platforms requires Ethereum, whether it's paying gas fees or staking as collateral. As more people use DeFi protocols, the need for ETH grows organically. NFTs are another major factor. Even though the NFT hype has cooled since its peak, Ethereum remains the dominant platform for creators and collectors. The network effect matters. The more developers, artists, and users rely on Ethereum, the more entrenched it becomes. Competing blockchains can't easily replace this ecosystem. This adoption isn't speculation, it's real-world usage that drives long-term value. And unlike many crypto assets, Ethereum is a diversified source of demand. There's DeFi's, NFTs, enterprise solutions, and more. Next, we're going to talk about Ethereum's 2.0 and proof of stake. Ethereum's transition to Ethereum 2.0 is another reason it still may be undervalued. Moving from proof of work to proof of stake reduces energy consumption, strengthens network security, and allows holders to earn passive income by staking ETH. Here's why this matters to investors. First, energy efficiency attracts institutional money. Investors increasingly care about ESG factors. A blockchain that consumes less energy becomes more appealing to institutions and large funds. Second, staking reduces circulating supply. When ETH is locked up in staking, it cannot be sold, which creates scarcity and supports the price. Third, scalability upgrades boost adoption. Ethereum 2.0 will enable faster transaction with lower fees, making the network more usable for everyday applications. These three changes create a structural undervaluation scenario. Even if market sentiment is neutral or bearish, the fundamentals of Ethereum are strengthening. Scarcity, adoption, and network improvement are happening quietly in the background. To put it in perspective, imagine a tech startup in 2015. Early investors who believed in the team and product are now holding a company that runs in trillions in economic activity. That's Ethereum today. Despite market crashes and hype cycles, Ethereum continues to increase adoption and real-world usage. DeFi platforms, NFT marketplaces, and corporate solutions all rely on Ethereum. Each new use case strengthens the network and increases the value of ETH. This is why short-term price movements can be misleading. You might see volatility in the charts, but the underlying adoption tells you a very different story. One of continued growth and increasing demand. We're going to go over a few reasons why we think Ethereum is undervalued. Bitcoin is often called digital gold, and it serves as a store of value. Ethereum, on the other hand, is a utility platform. Its value comes from usage, not just scarcity. While Bitcoin price is largely influenced by macroeconomic factors and sentiment, Ethereum's price has real-world drivers. DeFi transaction and fees, staking rewards, NFT activity, and marketplace growth. Enterprise adoption and smart contracts. This distinction is critical. Ethereum's fundamentals suggest that it could outperform Bitcoin in terms of real-world utility, even if the price hasn't fully reflected this yet. A few key metrics to watch. All right, first is total value locked in DeFi. This indicates real usage of the Ethereum network. Second, active addresses. Shows how many people are actually interacting with the network. Third, transaction fees burned. Tracks supply reduction over time. Fourth, staking participation. Indicates how much ETH is locked and unavailable for sale. Fifth, enterprise and developer adoption. More apps and contracts mean higher network utility. Tracking these metrics helps you see Ethereum's growth beyond just price charts. We'll go over a few practical steps for investors. First, analyze adoption trends. Focus on like new apps like the D apps, NFT activity. Second, monitor Ethereum 2.0 progress. Watch burn rates and staked ETH to see how scarcity is developing. Next, diversify exposure. ETH can be part of a broader portfolio of crypto, stocks, or alternative assets. The goal is to focus on real adoption and structural growth, not just price hype. So we go over that one more time. You have analyze adoption trends, monitor Ethereum 2.0 progress. Third, understand supply dynamics. And fourth, diversify exposure. So basically, if you're looking to invest in 2026, Ethereum is a great investment. Ethereum is more than just a cryptocurrency. So if you're looking to diversify your portfolio from stocks and real estate, Ethereum is an excellent long-term choice. And I appreciate everyone watching this video this week. So if you have any crypto related questions, feel free to leave them in the comments below. I'll be more than happy to answer. Please hit the like and subscribe, and we'll make another video next week.